Welcome to yet another episode of Grab Your Mug. My name is Salam Ilea, Human Resource Officer here at Ichiban Tax. Today I'm going to be having a conversation with Luke Njeru, who's our tax manager. Karibuni sana, grab your mug, let's get into the conversation. So Luke, what triggers a KRA audit for businesses in Kenya?
To begin with, Salame, in 2014 and prior years, taxpayers were required to file their tax returns manually. KRA introduced iTax, whereby every taxpayer was required to file their tax returns on the iTax platform.
Okay.
So, which essentially means that on a real-time basis, when you file your tax returns, KRA has a visibility. So, assuming a taxpayer who is registered for VAT obligation and income tax obligation, KRA can be able to run their data in terms of seeing, verifying, or doing an analysis of what the turnover they have declared in the VAT vis-a-vis their income tax return. And in case of a variance, so based on that variance, KRA now will be able to trigger an audit on that, to be able to understand why does the VAT turnover does not reconcile with the income tax.
Okay. A
second trigger is an inconsistency in filing of your tax returns. You might find a taxpayer who files a new return, files a correct return, or which we call an original return, and subsequently files an amended return. So KRA might want to understand, why is this particular taxpayer amending their tax returns? Is there something that they're getting wrong?
Okay.
Thirdly, you might, the Kenya Revenue Authority usually has a reward scheme for whistleblowers. So you might find in an entity or in an organization where you have a disgruntled employee. That employee, in case there has been a tax evasion in that organization, that particular employee might walk into the Kenya Revenue Authority and provide more information in terms of tax evasion.
All right, that is very fascinating. So say for any one of those reasons, KRA comes knocking, what documents am I supposed to have ready in readiness for that audit?
So Salame, when KRA wants to conduct an audit on you and as an organization or as a taxpayer, Kenya Revenue will send you a notice of intention to audit. In that notice of intention, KRA will issue or itemize all the list of the documents that they require from your end, which includes the audit and financial statements, the general ledgers, the trial balances, and other supporting documentation. So you as a taxpayer, once you receive that notification, it's important to confirm whether you have all the available documents that KRA has requested. And number two, it's important for you as a taxpayer to conduct a self-review in terms of understanding, based on this documentation that the Kenya Revenue Authority is requesting me, does it have any risk, and how do I mitigate? And lastly, it's also important, whatever you have declared with the Kenya Revenue Authority, it's also important to have all the support. If it's, for example, the expenses that you have expensed, you have any support documents to be able to demonstrate that. If it's for the turnover, have you issued correct or the tax valid invoices that are provided by the tax laws?
You have mentioned, maybe to pick on something you've mentioned, mitigating risks. So as a business, they have come calling, or the audit is coming or is going to go on. How do I proactively reduce the risks that are going to come with an audit?
Very good question, Salame. And it's also important even for our listeners to be able to understand, how are you able to mitigate the audit risk from the Kenya Revenue Authority? Number one is to ensure that you have a monthly reconciliation for both the turnover and the pay as you earn, so that you can be able, in case of any variances, you're able to explain. Number two is to engage a tax consultant, whereby if there are any gray areas that you are not familiar in, that you request for an advisory, so that you can be able to mitigate that risk of an audit.
Okay.
Another item is that the tax laws provides you can be able to request for a private ruling. And a private ruling is whereby you request the Kenya Revenue Authority to give you an interpretation of a certain transaction, so that you can ensure that by the time the Kenya Revenue Authority gives you that ruling, it's binding on the commissioner. Another item that you can be able to reduce or mitigate tax audit risk is to be able to carry out what you usually commonly call a tax health check review. common tax health check review is whereby you as an organization, you call in a tax consultant or an advisor to be able to verify the various transactions and various expenses or payments that you are making out to confirm whether how you treated for tax purposes, whether they were treated correctly. And therefore, in case there is any undisclosed income, you make a declaration to the Kenya Revenue Authority.
Okay. Thank you so much for joining us on this episode of Grab Your Mug. I'll see you next time. Adieu.